Hey guys, it's Arnie here and welcome to another week ahead video. Now, as you guys know, I am one of the commentary analysts on the Forex Source platform. If you are one of our subscribers, you would have heard my voice in the newsfeed as we do the daily video commentary analysis. So for today's video, I thought I would invite you guys into my office to show you exactly how the trading setup works or how my work setup works from where I do the daily videos. Now, in today's week ahead video, we are going to be focusing on the pound. As you guys know, on the 12th of December, which is Thursday, we have the general election for the UK. Now, this has been a very hyped up event. The markets are very psyched for this event. We've seen interesting moves in the pound in the run up to the election, and we think we can see a lot of volatility in the pound depending on a few scenarios and outcomes for this election. So without further ado, let's jump into today's video and we'll see exactly how we can prepare for these events and possibly trade the different outcomes as well.
All right, so as always, we will start by looking at the baseline for the relevant currency. In this case, it is the pound. Now, we've seen a lot of strength in the pound from the middle of October, when we had those first breakthroughs with regards to the new withdrawal agreement. Now, if we look at the charts, we can see that from the 10th of October, across the board, we've seen huge moves in the pounds. And if we look at the pound USD specifically, it has rallied almost 950 pips from the 10th of October as the market started to unwind some of the short positioning in the pound as those expectations for an orderly Brexit began rising. Now, the new deal brokered by PM Johnson's government has caused the likelihood of a no-deal Brexit to diminish, which has also been supportive for the pound in the medium term. And apart from that, we also saw the pound being supported recently in the run-up to this general election, as the market is widely expecting the Conservative Party to take a majority win in next week's election. Now, even though we have seen some up and down moves in the pound in the short term due to some contradiction election polls, the medium-term bias as well as the short-term bias has remained to the upside. Then looking at the baseline for this week's risk event, which is the general election. Currently, the election polls do suggest that the Conservative Party will take a majority win. We have the MRP model, which is the only one that correctly predicted the 2017 election results. That is basically suggesting that the Conservatives will win by a majority. And from the recent moves in the pound, it's clear that the market's already pricing in and gearing up for a Conservative majority win. However, history would caution us here just to be a little bit careful and not to read too much into the polls. The winner-takes-all election system caused big surprises in 2017 with the election. And you guys will also remember that in the 2016 referendum, the markets were widely expecting a Remain vote, and that came out as, due to the polls, and that came out as a Leave vote. So we would be careful not to put too much trust in the polls, even though the polls are very useful for building those expectations in the run-up to these type of events, like the referendum and the elections. The results from the 2016 referendum and that election caused big surprises when the actual results came out, which differed substantially from the poll results. So something just to keep in mind is that a few politicians has also recently mentioned that the gap between the two major parties, which is the Conservatives and the Labour, are not really as wide as some of the recent polls have suggested. Now, if that is really the case, it would seem that the gap between the Conservatives and the Labour Party doesn't really need to narrow all that much to cause another hung parliament, which is also something just to keep in mind. Now, there is a couple of possible scenarios that could play out from this election. So far, as we said, the market is expecting that majority win for the Conservative Party, and that is very important to keep in mind, as any change from that expectation would basically be against the market's current consensus. So then looking at some possible sentiment shifts, and the first ones we'll look at is the dovish sentiment shift. Now, Labour Party victory, the first and biggest dovish sentiment shift for the pound in the short term, could occur if the Labour Party pulls off an unexpected majority or minority win in this week's elections. A win by the Labour Party would most likely cause a significant sell-off in the pound for the following three reasons. Firstly, it'll basically be against the market's current consensus for a Conservative win. Secondly, Labour's economic policies are expected to have negative consequences on the UK economy. And thirdly, a Labour Party victory also makes the possibility of a Scottish referendum much more likely. Now, the first reaction in the pound from a surprise majority or minority win by Labour Party will most likely be a very big sell-off in the pound across the board. Also, as the recent gains in the pound from the expectations of a conservative win is unwound in the markets. However, there is something that we just need to keep in mind, and that is that a Labour Party victory, especially a majority victory, does make a second Brexit referendum much more likely. Now, as you guys know, a second referendum is seen as largely positive for the pound, because a lot of people have suggested that if we do get a second referendum, the majority of the UK will just vote to remain in the UK, as they don't want to be caught up in this Brexit mess for any longer. So if the market's attention turns to the likelihood of a second referendum, that could create lots of unwanted and unexpected volatility in the pound, and could cause some whipsaw in the markets. Now, that does pose a challenge for us for trading the pound in the short term, as it would be very tricky for us to establish exactly when and whether the market's attention turns away from the economic policies and the negativity towards the possibility of a second referendum. Knowing when the market's attention shifts can make it very tricky to trade the pound. So that is just something to keep in mind. Even though we do expect a big sell-off if we do get a Labour Party victory, there is that possibility of a second referendum if they do get a majority win. So that is just something to keep in the back of our minds when we do trade the pound from a majority win, a surprise majority win by Labour. Then a second dovish shift could occur in the pound if the Conservative Party wins the election, but they fail to achieve that majority. Now, that would cause political uncertainty, and it will probably force the Conservatives to try and form some form of coalition in order to avoid another hung parliament. Now, whether the Conservatives manage to form a coalition or not, it will mean that the Conservatives will struggle to pass the withdrawal agreement bill, and that also increases the possibility of a no-deal Brexit once more, and that will probably cause markets to start to reprice their current expectations for an orderly Brexit, and to start repricing in the possibility of a no-deal Brexit, and that would pressure the pound in the short term. Now, if that happens, we would see additional downside risks develop in the pound, especially since the market will start to reprice some of that pre-October uncertainty that saw the pound struggle for the majority of 2019. Now, there's also a slim chance that Labour Party could form a minority government if the Conservatives fail to form a coalition, which would also be seen as a negative at first, and that would also open up a lot of political uncertainty for the road ahead in 2020, and on balance would be a negative thing for the pound. Okay, then looking at a possible hawkish sentiment shift, a majority victory by the Conservatives will be the most positive outcome for the pound in this general election, as that would mean that PM Johnson should be able to get that Brexit withdrawal agreement deal through Parliament in time to leave the EU by January 31st. One thing to note on this, though, is that we have seen a lot of positivity priced into the pound already recently with the expectation of a Conservative Party majority win. So there is always that possibility that we might see some form of a buy the rumor, sell the fact reaction if the Conservatives do get a majority victory. However, a majority win also means that a disorderly Brexit, as well as a Scottish referendum, as well as an abrupt end to the December 2020 transition period is much more unlikely, and that on balance is still very pound positive. So that's just something to keep in mind. So on balance, a majority victory should be the most positive reaction for the pound, but just be careful of some possible price action swings due to the current positioning and the possibility of some sort of buy the rumor, sell the fact reaction that might occur in the pound this week. Now, how you can look to trade the pound. In the case that we do get a dovish sentiment shift, we could look to pair the pound against something like the Kiwi dollar, which has remained well supported of the RBNZ after the RBNZ opted to leave rates unchanged at their prior meeting and opted for a wait-and-see stance in monetary policy. We also had some positive recent developments for New Zealand dollar with some changes in capital requirements for New Zealand dollar banks, and we also had positive comments from Deputy Governor of the RBNZ, who stated that the NZD, or that the New Zealand economy is moving towards a turning point, and that even though there is still risks, downside risks, they are looking more balanced. Now, in the case of a hawkish sentiment shift, we could look to pair the pound against the euro, which remains fundamentally bearish due to the current economic slowdown in the European economy, as well as the softer monetary policy stance with the introduction of the ECB's latest stimulus package. Now, this event, whether we have a dovish or a hawkish sentiment shift, is valid for trading a phase one trade if we get a clear sentiment shift. Now, if you're interested to learn how these phase one trades work, you can check out our news trading strategy playlist on our YouTube channel, where we post weekly examples of how these type of trades play out. If we do get a phase one move, generated by some form of sentiment shift, then we could look to also trade a phase 2 pullback of that initial move. Now, if you want more information on that, we do post updates on these moves inside our tradable sentiment shift reports inside the Forex Source terminal under the Market Insights tab on a daily basis. And you can see each day which sentiment shifts are still in play and which ones are still valid for trading any phase 2 pullbacks. And you can also learn about how these setups work and ask any questions that you might have about them during our live analysis webinars that we hold each day inside the Forex Source terminal.
And there we go, guys. Thank you so much for taking the time to watch this video as always. If you find the content helpful, do us a favor, click that like button, the share button. If you haven't subscribed to the channel, do so if you want to as well. And make sure to post any questions, any comments you have down below. We do go through each and every one of them. And the videos that we're busy making, the educational videos, are based on the questions that you guys have asked us in the comment section. So please do keep them coming. Watch out for the channel. We are busy releasing a ton of new videos that we've created for you guys. So make sure to leave those comments, and then I'll catch you guys again next week for the next week ahead video. Cheers.